Hello, 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 hello. What's going on, everybody? Welcome to the Stock Trades. How's everybody doing today? All right. Well, happy Sunday. It's been a while since we went ahead and did live here. So let's go ahead and just talk real quick. This is going to be a very quick one. Got a couple things to talk about. Very important live. Definitely going to get some stuff here. Okay. Clove to retirement. What's going on? Let's go. Markets crashing. Buffett was right. Yo, hello. All right. So, first things first, what I wanted to actually point out right now is, your comments, unfortunately, Kenny, given that Buffett's still invested in the market, he's had the largest stockpile, but he's still invested. It's not like he's all pulled out. But let me go ahead and just put this in here. So if you go ahead and take a look at smart money versus dumb money. Now that the stocks have been falling, smart money has been buying, and then dumb money in red has been selling. Now, very, very quickly, guys, how is this information calculated? Well, if you have over $100 million, you have to register to the SEC that you're essentially going to buy or sell stocks. And you can see smart money has been buying up stocks while dumb money has been selling, right? So based off of Ken's sentiment, Ken, where do you think you fall in right now? Are you a buy the dip or are you sell, right? So, I always like to be data driven. Obviously, no one knows when a recession is going to come, but when everyone thinks a recession's coming, it usually doesn't mean the recession is coming. Does that make sense? So when everyone is afraid of a recession, that's when recessions don't really happen. They usually happen when they're usually unexpected, right? So what I've been seeing right now is smart money's been buying and dumb money is selling, but we are starting to see a reversal. So potentially we may get a rebound. But you could see right now, smart money's going in. Now, very quickly, in regards to Clover, real quick. Let's see. You see right now, Buffett investment team oversees 50 stocks in Berkshire Equity, which is valued at $272 billion. As of Q3, he has about 300, had about 225. So he's still obviously is holding stock. It's not like he sold out completely. So it doesn't, again, Buffett's wanting to get into large caps, but large caps have been broadening out, especially the Magnificent Seven. But I don't want to deter away from the conversation here. Okay. So the big thing here is, the stock's down for Clover, right? 5 days, we're down 7.38%. A month, we're down 16.89%. 6 months, we're still up. Year to date, we're still up 16.29%. 1 year, we're up 360%, but we're still down, obviously. And again, that $5 mark was rejected. Now, the question that we have to ask ourselves is, what's going on? Is this expected? Well, when the stocks in August rose up to $3.50, they actually fell back down near $2.50. In fact, this right here was a pretty much $1 drop, and it was pretty much a 28.26% drop. Okay. Right. And then it took some days to recover. Right. It took all the way from August to October to recover. So you could call it, September, about a month and a half to recover. Okay. And then we were up, and then stocks went from $4.35 down to $3.04. So you can see an ultimate drop of around $1.31, which was a 30.11% drop. Then it took some amount of days for it to recover. And then now we went up to $4.82, technically $4.86. And then we drop right now down to $3.64. And if we go ahead now and go all the way down here, we're down $1.18, 24.48%. So a lot of people can't logically frame this, and it goes into the psychology of money. But if we were to just mathematically look at it, I made this graph, and I think this graph is pretty good. So this graph is a depiction of Clover Health. Specifically, it's a depiction of this here, focusing on this drop only. So from the last earnings report, in which you see here, this earnings E, the stock dropped to find a bottom in 9 days. In 9 days. So technically, so before we get ahead of ourselves, it dropped down and it bottomed after 9 days. Obviously, there was a double bottom, but it bottomed, right? And it started bottoming and then consolidating. It took 80 days for the stock price to recover. So from this peak here to this peak, it took 80 days for it basically to stock price to recover. And I'm sure a lot of retail investors sold, right? You can ultimately see higher highs and higher lows here, but I get ahead of myself. So now that the stock price has dropped and it's been a pretty big decline, we even have a gap right here. You can see that it's been around 9 days. In fact, yesterday marked the 9th day after earnings. So the question is, are we going to be in the bottoming process now in the next week? Right? Absolutely, 27% from the current high. You're absolutely correct, B-Rad. I'm just using not the intraday high, right? The closing, right? So, all right. So in 80 days from now, from February 27 is when they reported. When is that going to be? Well, it's going to be 80 days from now is going to be May 18, 2025, which is right in time for this E here, which stands for earnings. So ultimately, I'm not stressed out. I'm basically, again, not financial advice, but I'm buying the dip and I'm making money doing the wheel strategy, doing covered calls and cash secured puts, right? I'm essentially using the volatility of Clover and making money on it. And having 75% of my money invested in the long term and 25% for specifically, not all my money, but 20. So 75% of Clover in long term, 25% of Clover in the wheel strategy. And it's really great because I'm able to take this wheel strategy and rent them out and make some money as my long-term stockpile waits for it to essentially accrue, right? And obviously the dividends I'm making, right? The dividends I'm making is going to be used to most likely buy the dip or, go ahead and just, pay for expenses. But, the big thing I want to basically say in regards to extrinsic factors, such as Buffett, right? I want to talk about more intrinsic factors. Oh, how are you doing? How are you doing? What's going on? What's going on? Right? So now let's talk about intrinsic factors, right? So, we had first let's one more extrinsic. So we got a technical breakdown, and right now we're at this red line, which is a simple moving average. So could this be, stage 2 going into stage 3? If that's the case, then we're going to get into a bear market. But could this be another scare where we basically revolve and bounce right after that 200 day and we go ahead and go back to our all-time highs? I think that's most likely the case, because if you go ahead and take the 4-month difference VIX and subtract it from the current VIX, or even the 30-month VIX subtract from the current VIX, it's actually signaling that there's going to be a bottom. Okay. So now that we talked about this, let's talk about intrinsic factors. So this is Tesla. Okay. And when you see this little buy button here, this was when Tesla became free cash flow positive on a fiscal year basis for the first time. And you can see the stock price soared. Okay. Now, this is AMD, Advanced Micro Devices, and you can see it became free cash flow positive here right before it went to the moon, right? And you can see, even though if it went from free cash flow positive, it went up, then it went down, then it went up. So this is a common theme for stocks. In fact, let's analyze that. It became free cash flow positive. The stock went up, then it basically came down, and then it goes back up, right? So there's that. Let's see if there's any other examples. Maybe this free cash flow doesn't mean anything. Let's see if we can apply it to something else. I sadly I don't have it, but you can look at Enphase, right? Enphase is another example, right? Here's Clover. Well, ladies and gentlemen, Clover's right here. Clover's right here, guys. Clover just became free cash flow positive on a fiscal year basis, right? And then now it went up and then it's going down. Sounds familiar? I think we're about to go up soon, especially Q1 of 2025. So another thing I want to talk about is used car prices. The Manheim index fell. That's pretty good. I think that's deflationary. Smart money is buying. Dumb money is not. What else? The big thing here, and really the majority of investing has to deal with the psychology of money, the cognitive biases that you have, right? If you're an adult, and if let's say you're 45 years old, and let's say you don't have any health issues, chances are you are poor. And if you are poor, chances are you're poor because one, the family you grew up in, but really it is the decisions that you have made that have been cumulative over the lifetime of your life, right? And it's, whether it be on purpose, whether it be just misinformed or ill-informed. Unfortunately, behavioral finance is really more than half of the battle when it comes to stock market. So we released a series of white papers from our deep dive educational research division from our Lifetime Access Our Stock Trades platform. I believe this one is 52 pages. No, this one's 30 pages. Transforming Your Money Mindset, the First Steps to Financial Freedom. I think this is 52 pages long. And then this here, History of Recessions, Crashes, and Financial Shocks, a psychological perspective. I'm sure there's recessions that you've never heard before, like 1792, 1819, 1837, 1857. And trust me, there's a lot more. This is a 44-page document, right? And what it does is it basically tells you why something crashed, why it crashed, and you'll start to realize that we've actually had a 2008 financial crisis before, at least not to that scale, but at least with mortgages and housing market, specifically housing market. We actually had it in the past, 20, 30 years before it happened. So the point that I'm telling you is history repeats itself. And if you are a master of history, you are a master of your mind. And if you are a master of your emotions, you are a master of life, right? So we released these out to our Lifetime Access members. Again, as you can see, this is a pretty big deal. There's going to be over thousands of pages of information, and it's going to be for people that are serious. Because if you want to truly understand what 2.5 billion outputs of institutionally graded data gives you, you have to have the mental and educational fortitude to understand the dynamics. But the beautiful part is we take you from zero to hero, right? And you'll gain insights better than any 4-year degree, even at Harvard. I can assure you that my platform is better than any business degree that you can find. How do I know? Because I have more and going to have more than 5. I'm going to have 5 degrees by the time I finish. And I'm telling you right now, the education that you'll be getting, it'll be better than any business school that you can attend, right? And to my friend who's doing his MBA at a very prestigious school, I don't want to name it because I don't want to single you out. You can go ahead if you're comfortable to saying regarding what our platform is doing, and you tell me, is that prestigious institution better than mine? Right? I'm very confident, right? So now let's go ahead and shift gears. So if you don't recall, in fact, before we even talked about, so the annual 10K report was released, and I just briefly read it because I wanted to confirm a hypothesis that I had, because I just didn't, and I was right? But that doesn't mean anything. I just wanted to show you what it is. So before we even get to it, let's go ahead and type in Clover Health Investor Relations and go to the quarterly release. Let's go here and let's just type this in. Okay. And this is I don't know why, but for some reason, this Adobe is not working and it's just really annoying. So what I'm going to do right now is I'm going to stop the sharing of the screen and I'm going to open up Safari, my Bari, right? Go ahead and do this one and then there. I don't know what's going on. I think I need to update my Chrome, but whatever. So the point is I'm going to scroll down to the cash flows here, more specifically the annual cash flows. And I want us to go here. So you remember when I said you take continued operations subtracted from properties, plants, and equipments here, which is going to be 8240 subtracted from 1556, which is around $81 million. Let's call it 80 million of free cash flow. But someone reached out to me in our lifetime and said, Al, technically we're at 30 million of around 32, 33 million of free cash flow. So I said, you know what? Fine. We'll be conservative. I appreciate that. But usually when I use my intrinsic value calculation, I like to use continued operations because this is discontinued operations, right? So if you do 82 subtracted from 47 and you subtract, go ahead and this, you get around 30 something million dollars. But the problem is discontinued operations from the cash flow statement here, it basically means very simply that these are operations that they're not going to basically do. And specifically, it's ACO, okay? Remember ACO Reach, the non-insurance side of the business that had an MCR of around 100% that they discontinued? Remember that $39 million that they said? Well, apparently, I guess maybe it could be 47. We'll call it 39, and let's say this is the other stuff that discontinued. But I think potentially it may be more than what they anticipated, right? So you can ultimately see these discontinued cash flows, and you can kind of look at them from the year. And you could see it was 109, 100. You could see they have been trying cutting costs, and you could see from here, this was 35, which is why I was confident that we were going to be free cash flow positive this year, right? As you could see how much they cut, right? So now that they cut the 47, what we could do is we can ultimately say, well, maybe there's a baseline cut rate of, I don't know, let's say 39 subtracted from 47. Let's say it'll be 8 million, let's say next year. I don't know, right? But I'm assuming the free cash flow will be pretty high, okay? So now that I talked about that, let's specifically go to the annual 10K report. But just for all intensive purposes, if you go to Clover right now and type in CLOV and you go to free cash flow here, you'll see 33.29. You won't see $80 million anymore. And that's with respects of and you could see here, that we went from negative to positive free cash flow, right? The free cash flow, right? This is the yellow, that's a big deal, right? It's still positive, but we're still calculating discontinued operations just to give you a little bit more holistic, accurate view. But even then, ladies and gentlemen, I still believe that I wouldn't include it, but we'll go ahead and do it. We had negative 86 million of free cash flow from Q4. And again, that most likely was about half of it was most likely due in part by the ACO. But again, if you look at Q4 of 2023, last year's, we went from negative 229 to negative 86. So I'm hoping this continues to improve, but I remain cautiously optimistic. But ultimately, we are free cash flow positive. Now, one thing I want to also mention is look at the book value per share. We went sadly 0.7 to 0.69. So Q4 was pretty tough quarter. We fixed the gross margins. Gross margins are high now, 26, 27. It did say a higher, and I was trying to figure out what the hell that meant. But it was out on 27, which is pretty damn good. So you will see, because interestingly, if you go to Humana's gross margins, I need to, sadly, I need to fix this one. There's a couple things we need to fix, but if you look at United Healthcare, it's 22.33%. Very quickly, let me go ahead and do the gross margins for Humana. Let me tell you, we have to sadly go to Brain Machine for that one, given that we are still in beta, hence why our products are discounted, because this will soon become $5, $10 to $15,000. Hence why now there's a $500 coupon that people can take advantage of and get $500 off while it's still lasts. Given that we are still in beta access, we're still uploading the courses, uploading the deep dives, and once all that's complete, the course will go back to its it'll go to its intrinsic value, right? Let me go ahead and go to the comments real quick here. Let me just tell you, the gross margins of Humana is, let me just give you this little quick screenshot here. The gross margins of Humana is 14.5%. Clover's is a lot higher, ladies and gentlemen. That's pretty sexy. Okay. So now we talked about that. And thank you so much, Drew. Al, thank you so much for the greatest investing community and stock terminal in the world. Al Stock Trades for Life. I love it. Appreciate you, Drew. If this goes much lower, you're going to see Al eat the meat, and it ain't pretty. It ain't pretty, guys. You don't want to see me eat, because when I eat, hi, Al, the problem is the macro future doesn't look good for tomorrow's opening. It may, again, it's short term. It's short term. I don't, short term doesn't really matter to me, because again, it's macro. It has nothing to do, it's extrinsic factors. It has nothing to do intrinsically, right? Which is why I have 25% of the Clover holdings into wheel strategy, so I can continuously milk and make money. I'm making like anywhere between 2 to 8% per week, which is pretty damn good, guys. No, not 8. Sorry, I'm making 2 to 8% per month compounded, which is pretty damn good. Okay, so I'm taking advantage of this volatility. I really am. Sorry, did I say it wrong? My bad, guys. Huh? All right, we got to get to the, I have a movie to go to, so let me see what else I need to talk about. Oh, yeah. So here's the ACO reach. And my girl's telling me I got to go. So sorry, guys. Just very quickly. We previously participated in direct contracting, yada, 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 yada. We notified CMS that we no longer will participate in Reach ACO. And the remaining activity recognized during 2024 directly relates to prior performance years. As January 1st, 2021, this line of business met definition of discounted operations, and per period amounts were updated. So this January 1 was discontinued operations, which is essentially what you see here. This is discontinued operations. So I think this is ACO's removal. So I hope that makes sense. Here's the support zone I was talking about regarding the Clover. So we're right into that support zone. I'm waiting. We were getting a stock price drop, but RSI is recovering. So this is a divergence, which means that it remains pretty bullish. Looks like a buy the dip opportunity. So what does this mean for Clover on the intrinsic value side? So we know that we said it's going to be 80. So if we just downright put Clover and let somehow it made it work, even though I put, that's weird. Okay, so here's Clover, and it calculates $5.21 for the bull case. But let's go ahead and reduce this. So we said 80, right? Sorry, my speech to text is open. We said 80. Let's do 45, right? Because if you take 5% of, I think, 1.8 billion, you get 90 million. Divide by 2, taking a 50% cut, which is pretty conservative, is 45 million in free cash flow. They're going to grow 37%. So if you run it like this, ladies and gentlemen, with 510.91 million shares. Yeah, let me just reload this real quick, guys, because this speech to text is open. and it's like a little bug up my butt. So let me rerun this. So it's to 45. Let's go ahead and do 37%. Let's go ahead and run this, okay? So by doing this, you get a bull case of 1365. But again, what I want to do is I want to say, let's say 37%. Let's cut that in half. So let's open up our calculator, right? This is our calculator, a handy dandy calculator, all part of the Al Stock Trades Terminal. You got your own calculator. And you can also type it. It has a little large language model kind of in there, right? So you take 37% and divide that by 2, right? You get 18.5%. So let's just say 18.5% is the growth rate. Let's say the other growth rate is negative, right? The other growth rate is not. We're going to call it negative, and it's going to eat up half of our free cash flow. So let's say our free cash flow now is 45. I'm being very conservative. You update projections, ladies and gentlemen, and you get a bull case of $3.72, which is right around 3.64. So that's, I think, why we're trading around this region. I think this is what Wall Street's looking at right now. But I don't care about this year. I care about next year, right? And the reason why I care about next year is like 2026 is if you go to Clover real quick, Peter said that they're going to be operationally net income positive. So if you look at any analyst estimates, again, all part of the Al Stock Trades platform. Again, I need to make these a little thicker. I like them thick. This is a little too thin for me. I'm just really not in the mood. I mean, I don't really like this. Institutional ownership. Yeah, these are pretty thick. But again, I like them thick, right? So we're going to have to, I signed up just for the calculator. I love it. Let me go ahead. I need to remind myself. I'm just typing, make graphs thicker. Okay. Yeah, I like thick meat, right? I like petite. So you like them skinny here? No, I like them thick. Because you can read them. It's hard to read them when they're a little thin. Thick is better. You can see it, right? Let's see here. Analyst estimates. Yeah, this is too thin, guys. What the? Hold on. Hold on. I did not make him this thin. Yeah, hold on. Let me just make this real quick. Hold on, please. Okay. I'm talking to my girl. Hold on. Okay. That is really thin. Holy God. What the hell? Anywho, I'm going to make those thick. Sorry. I have like OCD. Okay. Sorry. Back to the analysis. Sorry, guys. Okay. Yeah, it's too thin. Okay. So let's go ahead and let's go to net income. Here's net income. And you can see, it goes all the way to 2026, 2027, 2028, and 2029. So we're expecting, analysts are expecting net income to be negative 75 million for 2025. But watch, for 2026, whoa, they just changed it. Oh, wow. They just changed it. Analysts just changed it. They communicated together. They changed it to negative 46 million. That is interesting. Because remember, analysts were thinking it was positive net income in 2026. They're calling Peter as a bluff. And now they're thinking 2027 will be negative. And then now 2028 will be positive 85 million. Ladies and gentlemen, I'm just letting you know right now that these analysts are full of crap. They know because they watch our channel, and I've been receiving a lot of analysts watching and seeing my LinkedIn, and I have premium. So what they're doing is now they're communicating on their Bloomberg terminals. They're communicating inappropriate, wrong information because they're saying that 2026 and 2027 is negative. When, if you don't recall, 2 weeks ago, they said, or a week ago, 2 weeks ago, it was positive net income. So they don't want you to know this, right? They don't want you to know this. Oh man, these people are nasty, nasty people. Because now what they're thinking is the net income now for 2028, they're thinking it's going to be 100 million, right? So they want you to say, oh, we're going to be bullish in 2028. Nah, man, nah, I don't think so. Because Peter Peter specifically said that they're going to be positive in 2026. So we'll see if this plays out. So this will be a case study. Write it down on a piece of paper, put it under your drawers. We'll revisit in a couple of years. To all you Wall Street people watching my channel, I know we have a small channel, but screw you, Wall Street people. Oh, you guys think that just because you communicate on your Bloomberg terminals incorrectly, you think that I'm inherently gonna believe the numbers? This is analyst. This is analyst, guys. Whenever I look at this, it's like me checking CNN or Fox News. I don't give a crap about this, right? I'm just want to know what you guys are talking. And I know you guys, it's very clear you guys are full of crap. You guys are full of crap, right? So anyway, analysts are full of crap, okay? So there it is, right? Because if that's the case, then why the hell do we have a bullish score of 6? Now, you know what's funny? Analysts can't fake this. You can't fake it. What are you going to do? Sell Clover when it's free cash flow positive? Look at how many holdings now people have, right, for Clover. In fact, look at the total number of invested. Look how we broke out of this simple moving average. We have around $292 million of invested. They won't lie to you here because it's their money, right? So you know what, Wall Street? Come at me, right? I've been doing this over 10 freaking years. You think you're smarter than me? I tutored basically half of you people in Eller, right? That you guys now are trading the Wall Street floors. I tutored half of you people. Get out of here, right? Okay. So anywho, there's by the way, for people that don't know, I was the executive MBA. So what I did was I was the TA for the executive MBA portion for the economics side. So I taught them the calculus and the economics equations and also about finance as well, right? So anywho, whatever, dude. So silly. So long story short, well, first off, here's Palantir. This is our market sentiment intelligence. Here's Palantir. You run the analysis. Smart money became, bullish. 6 quarters out, we went to the moon for Palantir. Okay. Here's Clover. You run the analysis. We just became smart money here, getting into it. 6 quarters out. What do you think happened to the stock price? Right? Get out of here, Wall Street. Eat my shorts. Get out of here. Okay. Any of you guys, if you like this video, hit it with the smash button. I'm going to make those lines thicker because I like them thick, I tell you, right? And then we're going to go ahead and you're going to, go ahead and take advantage of this coupon code FLASH. Take advantage. Join the community of lifetime members. I promise you, you will not regret it, okay? God bless you all. Let me see here really quickly here. Little twig lines. Thanks, Al. I know, right? Analysts throw BS so they can buy in low. Exactly. They share secret code language in Wall Street. Exactly. LOL. Wall Street, Al cracked the code. I certainly did. Wall Street analysts going to war with a former homeless man with a YouTube channel. Yeah, come at me. Go ahead and communicate bullshit through your Bloomberg terminals. I'm picking it up, but it doesn't mean I believe it, right? I question everything, right? Listen, guys, I expect nothing and I appreciate everything, right? I expect nothing and appreciate everything, right? Anywho, love you all. Appreciate you guys. God bless you all. And I will see you on the next one. Love you all. I'm going to go catch a movie. I'm going to go see Captain America. Let's go.